Good morning, folks. So I hope you had a wonderful festival. It was Ganapati Habba, and the most loved god of India. All of us worship Ganesha. We should remember the one thing that Lord Ganesha does teach us is to discriminate by using our intellect. Okay. And in our case, what is this discrimination? We should be able to discriminate not just good from bad. I'm saying good signals from bad noise. Okay. So we are always bombarded with so much data and so much information. How do we figure out which is the right set of data for us to look at and to help make our decisions in the right manner? Okay. As a case in point, we had some wonderful news during this week, which were the first quarter GDP numbers that came in. And these GDP numbers came in at 7.8%, my friends, which is way above estimates. I'm not saying 7.8% nominal, this is 7.8% real, which is quite a bit of a surprise. Okay. Even the Reserve Bank of India has been only projecting a 6.5% GDP growth for the year on an optimistic basis. So 7.8 was a surprise. And out of this 7.8, we do see that it was manufacturing that did well and services that did well. These are the two segments that help boost the GDP numbers up to the level that we are. But the real GDP at 7.8, which is a surprise because the inflation numbers were very low. Okay, and the way they differentiate between nominal and real GDP is you have the gross GDP, which is a nominal GDP, and then you adjust it for changes in price. Okay, in other words, inflation, what economists call is they use a deflator to remove the price impact on the output and then come to what is called the real GDP. Okay, and the difference between nominal GDP and real GDP this time is very, very narrow. That's because the deflator that has been used was very low compared to earlier times. Okay. Yes, we know inflation has been low, but what does this indicate? A good high GDP number is great, low inflation, great. But when you're seeing that the difference, that the nominal GDP has been falling, even though real GDP is going up, nominal GDP is falling as compared to previous quarters, it means that producers of goods are not getting a significant positive impact of price. They have not been able to improve prices. So, well, that is not a great thing if you're a shareholder of a business, because the business is not able to improve their prices, improve their selling prices. And that is why if you are able to tie it in with the corporate earnings numbers of Q1, which I was speaking of earlier in the previous weeks, which were not too great, slightly disappointing, correct? Now you can match the two. Why is it that company results have not been so great? It is reflecting in these numbers. So let's not simply get lost in a great real GDP number. Let's also look at the nominal GDP. What are the reasons why the nominal GDP has fallen and how does this impact us? Okay, so that is where, but I'm sure the markets should be happy with this. It is still a good number. It is still a very good number. So, but I'm just trying to see beyond what the newspaper headlines say. Okay, and markets in general have been very wishy-washy last week. Well, we had positive news on the GST front in the previous week that kept some sectors up, but overall the pessimism on the tariffs is hitting the markets now. Foreign institutional investors continue to pull out money. Pessimism amongst Indian investors is also increasing. So markets have been weak. What has enabled the markets to be reasonably not as bad is because the automobile sector did well, IT unusually did well, and consumption did well. Okay, so these three sectors kept the index better than what it could have been. So it was GST and then a feeling that yes, tech has bottomed out and Indian The US GDP numbers came in pretty good, and that helped the IT stocks recover a bit. So these were the various factors. In any case, IT had fallen a fair bit. We do think it had bottomed out, and it was a reasonable contra call, in my opinion. And let's see how the future pans out, though. So, given that we had automobile and consumption and IT doing well, guess what? The low volatility index that we track amongst our smart beta funds outperformed most other funds, most other passive funds, most other active funds, except for a handful. So if you were looking at a complete list, you would see the consumption and tech oriented funds at the top of the table, thematic. And then apart from a couple of active funds, we had the low vol doing well and we had the quality doing well. So whereas the Nifty over the last 30 days actually fell by almost 1.72%, low vol was up 1.64%. The market fell 1.72, but low vol was up 1.62. Even quality was up in a similar manner. So that is why when you're building a portfolio, you need to be scientific about it. So if you had these two factors also in your portfolio, you would see that it would have given it some buoyancy. Okay, so I keep saying scientific portfolio construction is critical, and that is what will give you relatively peaceful nights when you go to sleep. Okay, there's no real great news on the tariffs. The US continues to ratchet up the rhetoric in media against India. It's gone to ridiculous levels, and they're basically blabbering whatever comes to the mouth. And I think, in a way, it's good that India is not reacting. But I do hope that there's some back channels working. Otherwise, we're in deep trouble. There is going to be pain from the tariffs, and we better watch out for it. And I'm really hoping that the government is doing something good without talking about it openly to correct the mess that we are landing ourselves in. Yes, it could have some fallout, I'm sure. So, like the Indian government is looking at the next set of reforms to bring in. And as always, if we are pushed into a corner, we fight back and we try to do things differently. And I'm hoping that will help the economy. Quite likely, it will help the economy. We will be forced to be more competitive. We'll be forced to look for new markets if the US is no longer a market for us. And eventually, when things improve, we'll be left with two big good markets instead of just one good market. Great to diversify in any case. Okay, so now as the Prime Minister moves to Japan, he's got a commitment of some $67 billion of investment from Japan to India, and in areas of technology that we do need. Okay, so that is a good fallout. Okay, so yesterday I was in conversation with a very noted economist, Prasenjit Basu, as part of a strategic talks by Hexagon. And I must say that there was one thing that he mentioned which has sort of stuck in my mind. He says, India only has another 15 years of demographic dividend. Right? What does he mean by that? He means that after 15 years, we'll have less of working age population and more of the older people. Today, we are at an advantage that we have the largest number of working age population in the world. And if we don't give them jobs, it's useless. Every day lost is an opportunity lost. So we need to be focused on just creating those millions and millions of jobs to give to this segment of demography that is supposed to be our strength. If we don't, it would be our Achilles heel. It would be very painful, and that will be the problem for us rather than the positive fallout. So I'm really hoping that we are able to give them the jobs and improve our economy and our prosperity. Okay. So there's some articles on capex. So we had Monday's headline where the Larsen and Toubro chairman saying that private capex is now a substantial part of their order book, and their order book is something like 6 lakh crores. Yeah. The order backlog of over 6 trillion is equal to 2.5 to 3 years of sales. So a trillion is 1 lakh. So we have 1 lakh crores. So 6 lakh crores of order book is what Larsen and Toubro has. Just fabulous. Just imagine the size of that engineering company. I think it's an asset that India has in the form of Larsen and Toubro. So while Larsen and Toubro is able to get a fair amount of orders, we have other economists in the mint, namely Dheeraj Nim of ANZ, who says that we cannot be optimistic on capex because demand growth is not there. India has sufficient installed capacity, and we are not, our capacity is not being sufficiently utilized that we need to put up new capacity. Generally, when we reach 80% capacity utilization, businessmen are eager to set up new plants, new factories. So we had fallen down during COVID, and we have come back to 75% capacity utilization. We're still not at 80, and Dheeraj Nim is not too optimistic that we'll reach 80 unless there are substantial economic reforms. Okay, Indian households have been constrained by higher inflation in the last few years and not matched by sufficient wage growth. So the spending power of the Indian household has reduced, the savings power of the Indian household has reduced, and they are borrowing more, as recent data shows, on non mortgage loans. Mortgage loans are backed by assets, it's okay. So when you're taking a lot of non mortgage loans, personal loans, not a great sign. And this is some of the data that has been coming up over the last few days, which I had occasion to see. Okay. Otherwise, we have seen that as far as precious metals go, gold mining companies have been going up. The stock prices of gold mining companies for a long time were not going up at the same rate as gold was. So it was being looked at as a significant potential to, that it had a significant potential to grow. And now it seems to be catching up. So some of the funds do have gold mining companies also. Then there was an interesting supplement in the business standard on infrastructure. Okay, so we do know the government spends 111 trillion over the last 5 years on various infrastructure. So where did the money go? And it gives a nice breakup. Was 24% of this went to energy, 18% went to roads, 17% went to urban infrastructure, 12% went to railways, 8% to irrigation, 7% to rural infra, 4 to social infra, and 10 to others. Okay, so if you as an investor wanted to benefit from it, I see that energy is a place where one can find enough listed plays to buy. Okay, and then railways has a few listed plays, but in roads and in urban infrastructure we have very limited choice there, okay, to buy. But if you were to look deeper into this, there's also substantial amount of investment going into improving logistics infrastructure, which will result in logistics cost coming down. So that is an area where you have listed players, and a lot of investment will be going into the Sagarmala and waterways development, port development, waterways development. That should be an interesting area to look for. And so power, waterways, power is already a discovered space, I would think. But waterways is coming up, logistics is coming up, all exciting places to be looking at, my friend. So with that, I close my weekly wrap. And by the way, friends, this is my 25th weekly wrap. Thank you so much for listening to me and giving me those wonderful, motivating comments, which makes me go on week to continue sharing my knowledge with you. Thank you so much. Grateful to you.